Hello everybody, welcome to Macroeconomic. Today we're going to be discussing the breaking of the rising wedge. So we did a video about this 3 months ago, right? On the previous rising wedge pattern. And in that video we discussed that that pattern is usually bearish. 60-70% of the time it breaks to the downside. Usually you need around 3 to 5 retests of the support before you break it, if we break it. And the probabilities each times we test that support increases significantly. And then we outlined the range where we could actually hit, which is this red zone. If you would like to watch it, I'm gonna put it in the play next at the end, and we actually hit that zone to the T, which was nice, and then we played around that zone. Now we're having the rising wedge pattern play out again. And there's nothing more beautiful than recency bias in Bitcoin, because things that happen more recent are likely to happen again, and that has played out again and again and again this whole cycle. So before we continue, my name is Mo. I'm a crypto and global micro market speculator. I've been a speculator for the past 7 years, and I was able to turn a humble portfolio into 6 figures this cycle. So I hope these videos can teach you something and you can learn, and I learn while producing them as well, because I do more research and I'm like, yeah, I should fact check that and make sure this is okay and make sure this is, you can make those claims. So yeah, if you like it, subscribe and like, and remember, nothing said in this video is financial advice. It is for education purposes only, and opinions, of course, you need to do a little bit more research and you will get your, the decision you have to make at the end of the road, right? So yeah, the rising wedge is a very bearish structure. So that's in terms of the market structure analysis. You usually need to hit it around 4 to 5 times for you to have a actually good probability of breaking it down. That's 1, 2, 3, and the 4th. The 5th time we actually broke below it. Right now we're retesting that pattern. We're retesting and we flipped the support to resistance, all right? So here it's a very key level. That's one. I think we should definitely track it like we tracked it here, and we were able to get that full down move, right? So if you're accumulating, then you should probably not accumulate here or here. This is the point. Of course, no financial advice. And at the end of the analysis, I will give you the targets where I think it would reach, just same as before. And hopefully, if luck was on our side and probabilities do favor us, we will actually break down and reach that level again. Now, the first mistake most people do is just because the rising wedge has broken down, it does not mean that we might break down and do some continuation of pattern, right? Sometimes it means that we may transition to a new market structure or a new pattern, right? But just the breakdown just happens down, all right? So now we broke down. Now we need to very carefully analyze if this is a transition into a new structure or a new pattern, or is it trend continuation, okay? And with that, we will introduce some macro view, right, and fundamental view to see if the odds should favor us again. With that pattern, if we were to do continuation of the general trend to the downside and actually confirm the bear market that is longer and not just a few months, one thing on the breakdown as such, you need to see increased volume, increased selling volume. Okay, so 2 of these 3 things have to hit, all right, usually, for us to increase our conviction. So 2 out of 3 at least need to happen, let's say, okay? After the breakdown, you need higher volume as such, continuous red volume. That's one. Here it was not a good trigger, but what happened here is actually the continuation candle, which is right here, right? So the continuation candle is characterized as 1.5 to 2x larger than the previous candles that have been in place before, okay? Or the second point here is also important, retest of the support. So here we retested the support, here we retested the support, here it's even a cleaner retest, so that's very nice. So one of them is hit, all right? Yes. The higher volume, not yet. And the continuation candle, I think this is going to hit more likely than the higher volume, not yet. And if that breaks down, then the second signal for the trend continuation, of course, this is very, very nice signal, but another thing that can increase our conviction is actually weekly closes here. So if we go to the weekly, right, so you need a weekly close in areas that is below that line right here. You can see we have failed many times to actually make a weekly close below here, right? So if we do a weekly close, that will be very good signal for the bears. And that means for the bulls, please wait and make sure, see the market structure playing out before we go all in on that trade. So a weekly close would look like something like that. Hopefully hit this week, but I doubt it. It would look something like that, or maybe like to here. And then after that, I think a lot of people are going to get the signal and it's going to continue the trend down. I believe that is one way how the market could actually play it out. So that's the fundamental, the technical analysis view. This is what the current market structure is saying. One more thing I actually want to raise your awareness to is the following. There are signs of distribution, especially at the supply area. Where is that chart? I have a lot of charts. This is, by the way, just I'm sharing my notes. I do not really make special notes for the video. I think this is the most authentic way. We're going to talk about this later and in another video. But if we cannot figure it out, I'll draw it again. Sure. Let's take a nice one. Nope. Okay, we can just do that here. This area keeps getting rejected. It's getting rejected over and over and over again. Every time the bulls or the buyers come in, the sellers just dominate. And we did it 3 times and we failed 3 times. Another market structure you can actually look at is the following. Head and shoulders pattern. It's not a clean cut, all right? It's not clean. It does not increase conviction by a lot, but it is there. The reason why it's not so clean is because the neckline should be horizontal, but this is not. It's kind of like has an angle, right? It has an angle. It's not vertical. That reduces the conviction of such a pattern, but nevertheless is there. It's still a head and shoulder, and we broke below it. The rising wedge pattern is also usually not a very big signal that the market is trending down, but all of them combined, the rising wedge breaking down, head and shoulder, not very clean, but breaking down. But what's the bigger signal is actually the supply zone being retested over and over and over, but we're failing to break above it. That shows the biggest weakness. To me, that signals a very big bearish sign. So when you take the supply zone being retested and failing to break up, when you take the heads and shoulders pattern, and when you take the rising wedge pattern breaking down, you get a more good analytical picture on the technical and market structure side. Another thing that can increase our conviction to the bear side is oil hitting all-time highs almost locally, right? Here we just wicked. If we do a close here, that would be very dangerous. Now the reason why oil is very important, and if we just go to this probably, yep, this one shows exactly what we're talking about. We did some prior analysis on this in prior videos, and this is like a full down research with a lot of macro views and historical analysis and a lot of stuff, right? When oil goes above and doubles 100% in such a short period of time, like 3 months, you get a regime change. Okay, you get a regime shift. You get a different market environment. And when you get different market environments, assets start to reprice accordingly to the new environment or regime, correct? So usually if we would have been around the 70 to 85 range, that's natural, that's absorbed by economies and global economies, and it's not affected a lot, right? If the economy is strong, it can withstand that level of price for 3-4 months, no problem. But when you go up to this range, the pressure building range, then economies, it's more difficult for them to absorb that new price, and inflation risk increases by a lot. But when you get to the macro stress zone, this is where stagflation risk starts to become real. Stagflation is when you have inflation and slower growth, which means recession, which is very dangerous. But when you get to the crisis stagflation trigger, which we are near to, 120 and above, and we remain there for some time, that is stagflation risk a lot. And especially if it stays there for an elongated period of time. So macro view to be bullish is very difficult, especially when you see increasing volume on the oil price. Bear view is easy to take right now, market structure wise and fundamental wise. Geopolitics is on the move, and let's not forget that the stock market is retesting its support, its resistance, sorry, and if that breaks to the upside, then I might become a little bit more bullish. But right now, I think we're more likely to just retest and break down. And if we break down, then I think Bitcoin might break down with it. April, the first few weeks of April are usually time of weakness for Bitcoin and the markets in general. So that all aligns as well. Now, of course, the elephant in the room, if we break down, where are we going to hit? Where are we going to go? Well, recency bias does it best. We take from the top to the bottom, and we analyze the top to the bottom. I think that was going to be around 46K, and it fits perfectly within that range. If you don't like that idea that we just take a line, I understand, right? I understand. A lot of people have a problem with it, but every time I do it, even in the previous video we did that, it just aligns perfectly. Okay, that's why I do it. This is one way I measure moves. Recency bias works very well here. I think we might hit in that range, and if I can, we did also some other analysis of where we can actually go down, and that range fits exactly within the previous analysis. Okay, we had also, you see that previous analysis determined here, and the red zone, this is 3 theories, this is why we know that price will go here. And actually those the intersection of those 3 theories is exactly where we had our bottom, which is right here, which is interesting, which is very interesting. Anyway, I hope you enjoyed the video. If you like it, please like and subscribe, and check out the other videos, as we do get a lot of things right. Okay, of course, nothing is financial advice. It is for market speculation only, and here when you're trading your odds, and of course, the better information you have, and I hope this is a good source of information, the better odds you will have. I'll see you next time.